We're back. Welcome. It's time for Ask Annex. Got a question for us? You head to the website, annexwealth.com. Look for the Ask tab. Fred Coleman's a CFP and a wealth manager. Hey, Fred.
Hey, Danny.
Matt Morzy, Director of Research and a CFP. Welcome to you.
Hey, Danny.
Question 1 on Ask Annex. Are the bigger opportunities in stocks that provide services to AI companies or the AI companies themselves? I'm thinking picks and shovels.
Yeah, great question. And AI certainly is, the topic of the day when it comes to the investing markets. And I went directly to our Director of Equity Research, Jason Cooper, on this one. He has a very big role in the individual equity portfolios that we manage here at Annex and is in the weeds with all the different companies that we have in them. And his view on AI, what he said is that picks and shovel companies are likely to be strong AI plays, but they lack the potential of the pure AI companies that execute well. They're also going to be companies that aren't picks and shovels AI plays, but use that technology that comes from the AI companies as well to drive productivity within their own business or to improve different products that they have as well too, which translates to pricing power. So it really depends on kind of what part of that spectrum that you want to be on. The highest upside is really going to be those pure plays there, but obviously a lot more risk with those as well too. But if you're funneling your product to them for them to be able to use, you're certainly going to make money there. And ultimately everybody wants to be able to use it to become more productive.
Fred, what's weird? Matt couldn't join us today. That's AI Matt. Something. What do you think, Fred?
Nice. I think we need to get an AI me as well. But yeah, AI is going to hit pretty much every part of the world, right? Every industry, whether we talk about healthcare, automotive, finance. So not just that pure AI company, but you also should look at your plan and see how much capacity for risk can you take on. If you're looking at just individual AI companies, that could be a little bit more speculative than, maybe looking at an AI ETF or something along those lines where you would get a little bit more broad exposure. But that we have, guys like Jason Cooper and Matt that do all that work and do all that research for you.
It's quite a team, isn't it?
Absolutely.
Yeah, you guys, I like getting down there. I feel dumber, but I feel way better because you guys are way smarter.
Oh, well, thank you, sir.
There you go. Next on Ask Annex. My grandfather recently passed. While going through his personal articles, we discovered $80,000 in cash. Are we under any obligation to report it to the IRS? My grandmother is still living.
80,000, that's a lot to be sitting under a mattress. But it is considered a part of his estate, and it should be disclosed and, treated just like any other asset in the estate. You have to report it to the IRS. And that's one of the benefits of, keeping cash, in an account such as a bank account, because that's going to automatically transfer as long as you have that transfer on death agreement on the bank. Or, if you have it in brokerage accounts or other type of investment accounts, then you can have beneficiary designations. One thing about cash, and we had a event a few weeks ago, it's called Passion Assets. And it's not just, things like cash, but there's a lot of different things that you can't really, put in an account, whether that be, you got cash under the mattress, or maybe it's some type of antique that you have. These are things that should be, considered in your overall estate to the best of your abilities. And our estate plan attorney, Alec Duran, he does a great job of showing you how these assets should be listed and just giving you potential pitfalls for not listing them the correct way. So definitely something that I would recommend. Is better to have an estate plan that includes as much as possible.
80,000. Oh, no. Did you say 80? Maybe it's 60 now.
It's a new truck in the driveway.
Right. If you've seen Ozarks, that's money laundering. No, we want to keep you away from that. Okay. All right. And our last question on Ask Annex, just real quick on this one, Matt. What is your investment committee's view on defense stocks? Now, there's defensive stocks, and then there's defense stocks.
Yeah, good point there. And I went to Jason for this one as well too. And again, this is what he does each and every single day. And when we look at the different companies that are out there that are weapons manufacturers on that defense side of things, there certainly is going to be more and more spending on that over time, right? We live in a world that has conflicts going on in multiple different parts at any point in time. And certainly spending, especially from Europe, who had underspended for quite a while, is going to be ramping up. And that's something we do know about. But a lot of that stuff gets priced into those companies right away, and they know about that future spend that's coming through, or at least people anticipate what that's going to be. So just because maybe some of those companies are making more money or producing more does not necessarily mean that they're going to be an attractive stock because of what price you have to pay for it. How well are they being run? Are there ones that are significantly better than the other ones from a stock perspective that we would want to use? And right now what Jason's saying is that, hey, there's no one that's really that indistinguishable from the other ones. So from an investing point of view, they're not quite where we'd want them to be, but certainly that's something we watch out for, and how, efficiently are they going to be able to manage that future spending.
He is the Director of Research and a CFP at Annex Wealth Management. Matt Morzy, thanks.
Thank you.
Fred Coleman, Wealth Manager and a CFP, thank you.
Thanks, Danny.